Now, if you're a new trader, before you even go about opening a brokerage and sending in a bunch of money and just going at it, I would really suggest opening a free paper trading account. Now, first and foremost, paper trading does get a bad name because there's zero emotions involved. And what that means is, you know what, if you're down $1,000, $2,000, $5,000, you're not really gonna care on paper. But in reality, it matters. So whereas you might have been down 5,000 at one point and then it came back and you ended up making money, is that really realistic? And how many times can you actually let a trade get $5,000 against you before you end up blowing up? And that's the real point that you need to consider when paper trading. So the way that I would use paper trading to your advantage is whether or not you understand the material. Take what you've learned on the DVD, take what you learn in webinars, and then start to apply it. And by apply it, I mean start buying when you see gearing and perking, the ABCD type setups, the parabolic shorts, shorting, all that kind of stuff, and see if that turns into buy low, sell high, short high, buy back lower. And if those numbers work out, then start with smaller amounts of money and work your way up. And the whole point here is just to really understand, hey, am I taking what he's saying and applying it and it's making sense? Or am I taking what he's saying and I'm still buying high and selling at the lows, or I'm shorting and adding, and I end up taking losses? And that is what you need to be able to take away from the whole paper trading aspect. Otherwise, it does get a bad name because people think, well, guess what? I just made $100,000 paper trading, so I can quit my job and go full time. It's just not the case. There's no emotions involved. If you're down, it doesn't really matter. You can always kind of restart a paper trading account is the whole argument against it. So like I said, prove it to yourself. Make sure that the trades that you're making make sense and are gonna make you money. And then once you're ready to start going, always start small. And I tell a lot of people that are just sort of starting out in a new strategy, even if they've got hundreds of thousands of dollars, just put a little bit of money in and go through the motions. It's all about going through the motions, because it doesn't matter if you have 100 shares, 500 shares, 1,000 or 5,000 shares. If you understand what's going on, you're going to be making money. But I'd rather, as you're learning and as you're proving to yourself that you do understand the concepts, I'd rather you be burning commissions versus hundreds or thousands of dollars. And the point here is that you can go in 100 shares. Are you buying lower and selling higher? Okay, you've done it for a month. Good job. Now you're gonna go to 200 shares, then 500 shares, 1,000 shares, and then you can start to trade with whatever size that you're comfortable with, because you've slowly geared up towards where you need to be. And a lot of traders have a tendency to go wild, especially when you're not under the pattern day trade rule, but there's no real point to having a ton of money in your account when you first start out. If you start in with a $50,000 or $100,000 account, there's a good chance that at some point you're going to either start averaging down, you're going to get emotional about something and add in to a size that you never thought you would even be in, and it's going to go against you, and you're going to lose 2, 3, 5, 10 times the amount that you ever thought about. And that's the key to starting small and then slowly increasing, because it's going to teach yourself the rules and the guidelines that you need to follow.